Hey everyone, Elon Musk thinks that Tesla stock could 5x or even 10x in the next few years, but the timeline wasn't really specific. So in this video, I'm going to look into that statement and see how realistic that 5x or 10x could be for Tesla stock, along with more details on Elon Musk's commentary. So let's get right into it. So here's the quote from its latest earnings conference call. Elon Musk saying, "I really see a path to a 10x, call it a 5x increase in the value of the company, and maybe a 10x." So let's say he thinks it's between 5x and 10x the company could increase, I guess, in the long term. He says long-term value of Tesla. So he goes on to say, and he goes on to give some more investment advice and say, for an investment advice, I see identifying a company as products you love and ask yourself, does it seem like they'll continue to make good products or great products, and then buy that stock and hold it. That's it. You all win if you can do that. And in my opinion, I don't think that's completely correct. And let me tell you what I mean. What if you find a company that makes absolutely great products? They make excellent products, but they can't sell those products, or they sell those products at less than what it costs them to make those products. That's not a business that you want to invest in. You don't want to invest in a business that spends $500 making a product and then selling that same product for $400. That's not a business you want to invest in, because on every item it sells, it loses money, regardless of how great the product is. Sure, I can make an excellent, absolutely amazing product and sell it by the millions if you allow me to sell it at a loss, if you allow me to sell it at less than what it costs me. So, just to add a little bit, I like the first part of the investment advice here, in that yes, find a company that makes great products, but at the same time, find a company that can make those products cost effectively, that can sell those products at a reasonable profit margin. Otherwise, as an investor, you're not going to benefit from that. What good is it to you if you invest in a company that makes products for $500 and sells them for $400? They're losing money with each product that they sell. How can you as an investor make money from that? So I just add a little bit to that. But of course, I understand with the advice he's giving, because for the most part, Tesla's cars are viewed by its investors as being really, really excellent. And some of Tesla's most enthusiastic investors are Tesla car owners. So the advice is self benefiting, if you will, to say, hey, look for a company that makes great products because Tesla makes great products and he wants to encourage investment in Tesla. I don't blame him for that. Maybe I would do the same if I was the CEO of a company like Tesla. So goes on to say, the reason companies exist is to make goods and services. They don't exist for any other reason. Again, I'll take some question to that. Um, the reason companies exist, yes, it is to serve customers, but it's also to make a profit. It's also to make a profit. People don't get up and go to work to just make things for other people. The reason people get up and go to work to make things for other people is because they expect to get rewarded for their services, for their products and the services that they create. So, yes, people need to create products and services for other people, but they also need to get rewarded for that. Otherwise, it's not a business, it's a charity. If you're just doing things for other people, you're a charity and you're not a business. So, I'm just expanding on the statements here. And then the CEO goes on to say, when the market panics, you should buy, and when the market is overly exuberant, you can sell. I agree with that for the most part. You don't, you get more, you have lower risk when you're buying at market bottoms, or when the market is in panic mode. You get, you're you're often buying with lower risk because a lot of the hype, a lot of the enthusiasm in valuations have been eliminated, and so you're buying stocks at that time. And then the opposite is true when you're buying when the market is completely enthusiastic and the prices have already increased substantially. You're buying it at rich valuations, which makes it a lot riskier because you're paying a very premium price for these companies. And, ironically, maybe Tesla stock is in that range right now. I have here Tesla stock price, market cap over the last 5 years, and the company is trading right now at a market cap of $831 billion, very close to the peak. Well, I shouldn't say very close, but its peak valuation was around 1.2 trillion. And so you're at the higher levels of its valuation. Of course, it exploded after 2020, so you're really buying this stock after the explosive valuation increase. And if you compare the Tesla's price to earnings ratio, its forward price to earnings ratio, again, it shows it how expensive it is. Tesla is trading at a forward PE of 52. And if you look at other car companies like Stellantis, Mercedes-Benz, General Motors, Ford, none of those car companies are trading at a forward PE of over 8. They're all 7.8 and below. So Tesla is more than 6 times more expensive than any of those other car makers. And then, okay, so you can argue with me and say, well, Tesla's not a car company. Tesla is a technology company. It's got the most innovative technology. Okay, I'm not going to argue with you against that. Let's look at some technology companies like Microsoft and Apple. They're trading at forward price to earnings of 29 and 27. So Tesla's even significantly more expensive than tech companies like Apple and Microsoft. And so either way you slice it, Tesla's valuation is rich. And you can argue that Tesla has better prospects than any of these companies. They've got better technology and all of that. And okay, I might agree with you. I'm not going to argue with you on that. But then you can also say, well, isn't that already more than accounted for in its valuation? It's already trading at such a premium price compared to so many other companies that you compare to, whether you compare to car companies or you compare to technology companies. So I guess in my opinion, I would say maybe, sure, the stock does have a chance to 5x or 10x in the long run if it can implement that full self-driving technology. I think that's a major key in Tesla's valuation in the long run, is that full self-driving technology, which will couple with the robo-taxi fleet. I think if Tesla can do that, that could unlock a boost in its valuation. Otherwise, I think that it's already grown in value significantly over the last couple of years, and I think it needs to take a breather here for at least a little while longer. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.